Hi everyone, welcome to the new video of the Minute of Taxes. I hope you are not new to this channel, and today we're going to be sharing about a question that comes more often from my customer or from my friend and family. The question was, what's the difference between tax credit and tax deduction? So if you don't know the answer or you're unsure about what it is, you're sometimes confused, then the next 3 minutes are going to give you a big insight of uh, what is it when it comes to tax credit and tax deduction. So I'm going to share with you the difference, and I'm going to share with you about who actually is more likely to take a tax credit and who is more likely to take the tax deduction. That means when I share that, you should know if you find yourself among the people who should be claiming tax credit. Don't bother yourself to look for tax deduction because you won't have it. If you find yourself among the people who should actually be claiming tax deduction, don't get too mad when your CPA tells you, oh, you were not able to take this credit, because you know that you may not be eligible, even though you think that you have all the requirements to take the to take the credit. So without further ado, what is a tax credit? What is a tax deduction? All of those, whether it's tax credit and tax deduction, all of those are strategies to saving taxes. Okay, so whether you are taking a tax credit or tax deduction, you are saving taxes. But what is a tax credit? A tax credit is any credit that is given in your taxes to help you reduce the tax liability and thus increase your refund. Most of the time, when you have tax credit, you automatically have an increase of your refund. You can actually know how much your income will increase by. Okay, that is tax credit. That means it's a dollar for dollars reduction of your tax liability. It could also result in the dollar amount of your income, of your tax refund, sorry, okay, or a dollar for dollar reduction of your tax bill. That is a tax credit. That means any amount that directly has an impact on your taxes or a direct impact on your income. That means if you have a $5,000 tax credit, it means that you may have $5,000 increase in your income or $5,000 decrease on your bill. Let's say your bill was $7,000 and you have $5,000 tax credit. It means that you may have the new bill will be only $2,000 because you have a $5,000 tax credit. It reduces your bill or increases your income, your refund. Another way to see it is that if your refund is supposed to be $2,000 and you have $5,000 tax credit, most of the time, if you fulfill all the requirements, I mean you have all the tax owe is enough for you to actually claim the credit, then instead of having $2,000 refund, you will have $7,000 refund. That is how you know what is a tax credit. Of course, there are so many details to go into. If you watched yesterday's video, you will know that there's also difference between, refundable and non-refundable tax credit. We have a video, I think it was video number 21 or number 20. So now, what's the difference? What is a tax deduction? The tax deduction, in the other hand, is just a way of reducing your taxable income, basically. It's a way of having a lower AGI, adjusted gross income. So tax deduction actually has an impact on changing, for example, your tax bracket. Changing your tax bracket can actually give you a really big chunk of tax saving, right? Yeah, because let's say you are on the 25 tax bracket and you have a saving of a tax deduction of maybe $25,000. If your income was $100,000, now your new income is $75,000. That can move you from one tax bracket to a different tax bracket. Eventually it can actually help you to pay less taxes, because the tax on $25,000, that is what you are actually saving. The tax on $25,000, if it's 25,000, you can actually do 25,000 times 25%. That is actually like 6,000 that you're saving. Okay, so if you are saving, you are taking a deduction of $25,000 of your income, and that $25,000 belongs to a 25% tax bracket, you are actually saving $6,250. This is how you see it. Of course, when I give those examples, you can actually very quickly notice that the people who can claim tax deduction are most of the time the people with high earning income. I mean, the people who are making more income, because if you're making less income, you're taking those deductions. Now you have very less income to actually claim those credit. You also have to know that the credit, you also need some income to claim the credit. So most of the time, the people who are more likely to claim the deduction are the people who are making higher income. When you make more income, you need to figure out how to reduce those income, and that is where the tax deduction comes into play. That is how you think about deferred taxes. That is how you think about having some strategy to get less and less and less taxable income by figure out how to deduct income. But the tax deduction for businesses is more what is called write-off, because as a business owner, you can deduct everything that is business expense, okay, to have a lower net income. The net income is actually where you pay taxes on when you're a business. So on the other hand, for tax credit, the people claiming tax credit are the people actually trying to get lower taxable income. So this is why the tax deduction is really important. Why? Because as you are claiming a tax deduction, you can actually bring your income as a lower income and now be eligible to also take the tax credit. You see why the tax deduction is important, especially for people who are making more income. So if you are not making more income, you need to think about how to not losing the tax credit, because you're not a high earning income. But if your income reach a certain level, you're still a lower income, but you're still gonna lose those tax credits. So that is the reason why you actually need to consult with your tax professional, consult with your CPA to know where you should stand when you are thinking about saving or taking the credit that you think you are actually eligible for. Okay, so this is what I want to share with you. If you have a question, share with me on the comments of this video, or if you would like me to share any other topic tax related, it will be my pleasure to wait and see how it can fit in our schedule. So that was the Minute of Taxes with your tax and accounting specialist, Roussel EA. See you tomorrow for the next number of the Minute of Taxes. Ciao. And as always, the best way to show that you like it is not always to say you like it. It's just to share and subscribe to the channel, because we are actually trying to reach the bar of 1,000, so that we can actually start this live from YouTube instead of running the video and sending them to YouTube. So yes, share it and drop the comments if you like it. If you don't like it, tell me why you don't like it, so I'm going to improve. So until then, see you tomorrow for the next minute of the Minute of Taxes. Ciao. So I believe that by now you have learned at least one thing that you didn't know about how to legally save in taxes. If you really need to know even more in depth of what you have learned, or even a different strategy of how you can do as a business owner, as a simple taxpayer, I will invite you to click on the link below to see all the other tools or training that I have available for you. See you in the inside.